All right, today we are going to pull back the curtain and decode the playbook of the wealthy. We're going to show you exactly how Indian real estate can build not just wealth for you, but wealth that lasts for generations. We're going way beyond just buying and selling. We're digging into the mindset, the strategies, and even the advanced hacks that can completely transform your financial future. So let's just kick things off with a real story that shows you the incredible power of what we're about to unpack. I want you to imagine this. You invest 50,000 rupees back in 1990. Now, that was a good chunk of change back then, for sure, but not, an impossible amount. Now, imagine that same 50,000 rupee investment is worth a jaw-dropping 6 crores today. Sounds crazy, right? But this isn't some stock market fairy tale. This is the reality of Indian real estate. And by the time we're done here, you'll understand exactly how this happened.
So that quote, it's from a real story about an army officer who bought a 2,500 square foot plot in Chandigarh. And get this, he even had the chance to buy the plot right next to it for just 20,000 rupees more, but he passed on it. But that one decision, just to buy that first plot, well, it created a legacy. Today, we're going to break down how these kinds of insane returns are even possible and how you can put yourself in the right position to capture that kind of growth.
So here's the game plan for today. First, we're starting with the most important part, the wealthy mindset. Then, we'll zoom out and look at the big trends driving India's real estate boom. After that, we get super practical with a playbook for your first property. We'll explore the huge opportunities in Tier 2 cities. I'll teach you an advanced wealth hack. And finally, we'll cover the common mistakes you absolutely have to avoid. Okay, Section 1, the rich person's mindset. And this is probably the most crucial part of this whole masterclass. It's a total shift in thinking. For just a minute, I want you to stop thinking about real estate in terms of, what's the annual return, and start thinking about it in terms of human behavior. That is the fundamental secret. I love this analogy. Think of real estate as the strict father and capital markets as the loving mother. The stock market, right? It's liquid. You can sell your shares with a click, and that makes it so tempting to sell when a stock doubles and you chase those quick profits. But real estate, it's illiquid. It is hard to sell. And that is its greatest strength. It's a blessing in disguise because it forces you into long-term discipline. You can't just panic sell your house when the market has a bad month. You are forced to stay in the game for decades. And that discipline, that's what builds unbelievable wealth over time. And that leads us to this key idea of real estate as a behavioral asset. I mean, think about it. You probably don't go to a family dinner and announce, "Hey everyone, my mutual fund portfolio did great this quarter," right? But buying a property, even a small one, that's a huge event. It's a public announcement of your success. It boosts your self-esteem and your social standing in a way a financial statement never, ever will. And that deep emotional connection is exactly why we hold on to it for generations. That simple act of just holding on is what creates the wealth. And the ultimate example of this, Mukesh Ambani's Antilia. It was built for roughly 6,000 crores. And a lot of people said it was just too much, totally unnecessary. But it was a statement. It was a benchmark. And today, just 15 years later, its estimated value is 18,000 crores. That's a 3x return. Its value isn't just in the bricks and mortar. It's in what it represents. It wasn't built for rental income. It was built as a symbol of success. And the market priced that symbol accordingly. All right, on to Section 2, India's real estate boom. So now that we've got the right mindset, let's zoom out and look at the big picture. What has been going on in the Indian market over the last few years? Because honestly, the growth has been nothing short of explosive. So here's what the last few years have looked like. Starting in 2021, right after COVID, the market has just been on fire. We saw years of 25% annualized growth, which is just staggering to think about. By 2023, that fire spread to Tier 2 cities. Places like Goa literally blasted off in value, driven by this new desire for a better quality of life. And now, as we head towards 2025, things are starting to normalize. That crazy, supercharged growth is settling down. But that doesn't mean the opportunity is gone. Not at all. It's just shifting into a more stable, predictable phase. The highest growth actually came from a really unexpected place. The NCR region. Delhi, Gurugram, Noida. After nearly a decade of just sitting there, it suddenly boomed. And there were 3 main reasons. First, massive pent-up demand. Second, a huge flood of NRI investment. And third, and this is crucial, all the wealth from startup IPOs. You had all these new millionaires who needed to save on taxes, and investing in residential property was one of the only ways to do it. And that just poured fuel on the NCR fire. So if you want to know where the next boom is going to be, you just need to follow this one golden rule. Follow the infrastructure.
Real estate value is created by roads, bridges, airports, and metros. It's that simple. Just look at Vashi in Mumbai. 10 years ago, it was a total pain to get to. Then they built new bridges and expressways like the Atal Setu, and suddenly connectivity was seamless. The result? Property prices quadrupled in 10 years, going from 5,000 to 20,000 rupees a square foot. Why? Purely because of infrastructure. This is the single most powerful clue to future growth. Okay, that brings us to Section 3, your first property playbook. We've talked mindset, we've talked big picture. Now let's bring it all the way down to you. How can you actually make real estate affordable and a smart financial move for you right now? This is it. This is probably the single most important question for any first-time homebuyer. The one question that keeps people up at night. You're earning a good salary, you want to buy a home, but you are terrified of getting trapped in an EMI that just cripples your finances. So, what's the magic number? What's the safe limit?
The answer is 50%. And let me be crystal clear about this. The grand total of all your monthly debt payments, your home loan EMI, your car loan, your credit card bills, all of it should not be more than 50% of your take-home monthly income. This is your financial safety net. If you stick to this rule, it ensures you have enough money left over for savings, for investments, and just for living your life without being under constant financial stress.
So let's break that 50% down. Ideally, you want to cap your home loan EMI at around 30% of your income. That leaves a 20% buffer for any other loans. So for example, if your household income is 1 lakh per month, your home loan EMI should not go above 30,000 rupees. It's this disciplined approach that is absolutely key to buying a home sustainably. If you're finding value in this video, please subscribe to our channel for more videos like this. Okay, on to Section 4, investing in Tier 2 cities. Look, for so many people, especially in the big metro cities, affordability is a huge roadblock. You might be sitting there thinking, this is all great, but a decent house here costs 2 crores. How am I ever going to afford that? Well, the answer might just be outside the metros, in India's next big growth story. So where should you be looking? This table is basically an expert-backed guide if you have a budget of around 1 crore. These cities have phenomenal growth potential. Up north, you've got Lucknow, Indore, and Jaipur. Down south, Mysore, Cochin, and Mangalore. Out west, look at the outskirts of Pune, or cities like Nagpur and Nashik. And in the east, areas around Kolkata and Durgapur. These are the places where government investment in infrastructure and corporate expansion are creating massive opportunities, but at a price point that's still reasonable. And now we move to Section 5, Advanced Wealth Hacking. So we've covered the fundamentals, we've talked about buying your first property, but for those of you who want to really accelerate your wealth creation and build an entire portfolio of properties, there's a strategy that the high net worth crowd uses, and you need to know about it. It's called lease rental discounting, or LRD. And it works like this. Step 1, you buy a commercial property, let's say an office floor for 10 crores. Then you lease it to a top quality tenant, think Google or Microsoft. Now, that lease agreement, that's a guaranteed future cash flow. So you take that rental agreement to a bank. The bank looks at the quality of your tenant and knows that rent is rock solid. And here's the magic part. They will give you a massive loan, maybe 7 crores, against that future rent. That 10 lakh rupees a month you were getting in rent now becomes the EMI for this new loan. You have just unlocked 7 crores in fresh capital, which you can now use to go buy your next property and repeat the whole process. This is how you turn rental income into an engine for serious portfolio growth. All right, finally, we've come to Section 6, avoiding common mistakes. Look, knowing what to do is great, but knowing what not to do is just as important. The first rule of investing is protecting your capital. So let's cover the traps that so many new investors fall into. So when you're sitting across the table from a builder, don't just get obsessed with the final price. The smartest negotiations aren't always about getting a discount. First, negotiate the payment plan. Can they structure the payments to align with your future salary hikes? That can be a huge relief. Second, ask for customizations. A free built-in kitchen or better quality flooring could be worth lakhs. And third, if you have the cash, offering a larger upfront payment can sometimes get you a surprise 5 or 10% discount. You have to think beyond the sticker price. And please, avoid these big blunders. First, overconfidence. Everybody thinks they're a real estate expert after watching a few videos. That's a dangerous trap. Second, compromising on location just for a cheaper price. Remember the golden rule? Infrastructure. A good location will always appreciate. Third, picking the wrong design. Will that one-bedroom apartment still work in 5 years when you have a family? Think ahead. Fourth, poor financing. You have to understand every single detail of your home loan. And finally, ignoring the legal stuff. Meticulously check the RARA approvals and the land ownership records. These basics will protect you from disaster.
At the end of the day, remember to treat real estate like the blue chip investment it is. This is not about getting lucky with some penny stock and hoping it goes 100x overnight. This is a game of patience, of discipline, and of long-term vision. It's about the stability and the predictable growth that comes from holding a real, tangible asset for decades.
And I just want to leave you with this final thought. The growth story of India is the growth story of its cities. And the question for all of us as we participate in this market is this: are we going to approach this opportunity with a disciplined, patient mindset of a true long-term investor, or with the frantic, speculative energy of a short-term trader? The answer to that question is going to define not only your financial future, but the future of our cities as well. Apply this lesson, think long-term, and build wisely.